Happy New Year and welcome to Australian Super's Mid-Year Performance Update. Hi, I'm Chris Tan, Head of Investment Capability for Fixed Income and Currency. We're here at Assemble Kensington on Thompson Street, one of our local property investments here in Australia. Joining me shortly will be Justine O'Connell, our Head of Portfolio Strategy and Risk. She will discuss investment performance, the key themes driving markets, and our outlook for 2026. All of our pre-mixed investment options delivered a solid result for the first half of the financial year. The balanced option generated 4.7% for super accounts and 5.2% for choice income, our retirement accounts. Justine, what's driving this growth?
Share markets continue to perform really well, and international shares in particular delivered the highest return across our asset classes. About 2/3 of the balanced option is invested in equity, so that's been really good for member balances. Over the last 6 months, these returns haven't been as concentrated in US tech stocks as the market has broadened, and that has benefited our more diversified approach.
What else has been doing well?
Unlisted assets have shown improvement, particularly private equity and private credit. That's also benefited a more diversified portfolio.
Speaking of unlisted assets, this 199-unit apartment building was completed in June 2024. And through our partnership with Assemble, we expect to deliver more than 3,000 homes by 2030. This is one way we're seeking scalable solutions to deliver strong long-term returns for members, while also contributing to housing supply here in Australia.
Chris, your role covers more defensive asset classes like fixed interest. How have those asset classes been performing?
Well, fixed interest and cash have delivered steady but more modest returns recently, kind of what you'd expect. But importantly, investing in a well-diversified portfolio helps cushion the impact of market volatility.
That's an important point to remember. When markets are volatile, it helps to be invested in a diversified portfolio across a range of asset classes.
So what's our outlook for 2026?
Let's start with interest rates. They're important because they control how easily people and businesses can borrow money, and that drives things like spending, prices, and profits. In 2025, most central banks lowered rates, and that was generally positive for economic growth. But many of those central banks have now slowed or paused their easing cycles for now. It's uncertain what will happen this year, but rates may likely fall further in places like the US compared to here in Australia.
What else is driving growth?
Artificial intelligence continues to drive performance. We've seen hundreds of billions of dollars invested in the tech sector, and that's driven strong earnings and investment returns. In that environment, unlisted asset classes have lagged, but we're starting to see them catch up. But at the same time, listed valuations are now high and the AI cycle is maturing, so there's a lot to consider in the year ahead.
Geopolitics also continues to dominate headlines, but despite all the volatility, equity markets delivered great returns last year. Do you think more stable trade and policy easing will encourage global growth again in 2026?
Yeah, I think so, Chris. There's a lot of uncertainty, but overall we expect to see most economies, including the US and Australia, grow at a similar pace this year. There may be some exceptions like China and the UK, but the bottom line is we're actively managing uncertainty. We want to participate in the upside if markets continue to rally, while maintaining diversification to invest through the market cycle.
And I think that's the important point. Our investment team is actively managing the portfolio to deliver the best outcomes for your retirement savings. Justine, I think this is a good example of how we're leveraging our strengths. In Australia, we use our local expertise to source new opportunities, whether it's here at Assemble or our investments in Sydney and Perth airports. Australian Super members have over $170 billion invested here at home, and that's contributing to the housing supply, investing in local infrastructure, and providing support for Aussie businesses and jobs, all while generating returns for your savings.
We also have offices in New York and London, which provide around-the-clock management for your super to deliver better returns for you as we continue to grow and scale.
We're keen to share more with you about our investment strategy and performance. If you'd like to learn more, join us for our next investment webinar in March. You can find more details and register via our website. Thank you.